and welcome to Businessline on NDTV-HINDU. I'm Pranav, Bakshi, and over the next half hour, we'll give you a roundup of all the business news and views from around the country. Our top story has a shine to it. Go for gold. That's what the bankers in South India are telling their customers. Just ahead of the festive season, banks have turned attention towards the yellow metal in an effort to reduce the risks on the loans they make. Here's what's happening.
Southerners love gold, and bankers love their craze for gold. With security high on their mind, bankers are looking for a deal literally as good as gold. Recent months have seen banks push heavily for loans against gold, especially in the south, where they found many takers. Oriental Bank of Commerce has seen its gold loans portfolio grow at 20% from April till August year-on-year. SBI has grown by 10% in the same period, while Bank of India showed a handsome 30% incremental growth this fiscal. So did Vijaya Bank, that showed a good growth number of 35% in this portfolio. Amongst private banks, HDFC Bank, which entered the fray about 24 months ago, is clocking a year-on-year growth of around 60%.
For me as a banker, it's extremely attractive because I get the interest rates which I desire. Secondly, it's something which will never fail. I can sell the gold and recover my money. I have nothing to worry about that.
The yellow metal, that is currently trading at over 15,000 per 10 gram level, has gained about 5.4% in the past 1 month and around 4.6% this fiscal, which explains the confidence of banks to come out with schemes such as instant cash on the counter against gold as mortgage. And they hope to increase their business in the coming festive season.
Most of the farmers prefer to take jewel loans for meeting their immediate agricultural and personal requirements also. We have been aggressive. I think this year so far our jewel loan portfolio, if I remember well, has grown by about 30-35%. We are looking for good growth in jewel loans.
In boom times, the banks that push personal loans for the lure of higher interest rates are now busy selling gold loans to customers to minimize the risk of loss due to default. For the customer, it puts lesser pressure in terms of comparatively lower interest rates and faster processing. So here are loans that glitter both for the bank and its customers.
And it's not just gold. Banks are vying to cash in on the festive season. With a large number of offers on retail loans, customers are riding high on this wave of waivers, discounts and special offers. In fact, it will turn out to be a win-win for both banks and customers. Here's why.
As the celebration bells get louder and the streets don a fancy look, banks are getting set to ride the festive fever. After a lean credit demand period where credit growth for the banking industry has been in the range of 16% to 18%, banks are eyeing the festive season retail pie to lift the credit offtake. Union Bank is the latest to enter the fray with its home and car loan offers for the festive period. The bank is offering home loans at 8.5% for first 3 years for loans up to 50 lakhs and a concession of 25 basis points to 50 basis points for loans above 50 lakhs. It is also offering car loans with a discount of 75 basis points to 100 basis points depending on tenure. Union Bank's scheme for home loans betters Bank of India's that has a fixed 8.5% interest for loans up to 50 lakh rupees up to December 2010 and 9.25% up to December 2011. It has also reduced interest rates on auto loans of up to 10 lakhs by 125 basis points to 8.5%. As for Punjab National Bank, home loans up to 30 lakh rupees will attract 8.5% interest rate, while loans above this will attract 9.25%. But the loan wars was initiated by the Big Daddy SBI that launched variable interest rates for first 3 years of loans up to 50 lakhs and a fixed 8.5% for 5 years for small ticket home loans of up to 5 lakhs. Fresh loans have thus become cheaper by 25 to 150 basis points.
Where we reduce the rate of interest marginally to give a fillip to the otherwise available demand in the system, which we have in Union Bank we are offered yesterday. But for that, our expectation is interest may remain stable for some time to come.
Within a few days of announcing the offers, banks are beginning to see a good response. Even the customers sense that it may be the right time to pick up loans, as bankers are hinting at possible hardening of interest rates within a few months. It is a festive bargain both for banks and customers who are depending on each other to begin their celebrations. Hope the merrymaking spills beyond the festive season.
Let's take a quick look at the market updates now.
The Indian stock markets took a breather this week after recent gains. The Sensex closed the week marginally below last week's close at 16,757. IPOs opening this week had to contend with muted response after oversubscription to previous offers. The Euro Multivision IPO saw a subscription of about 2 times its offer size. Thinksoft Global had to extend its offer closing date to October 1st from September 24th. The price band too was lowered. The institutional portion of the offer saw very limited response. Investors received allotments in the Oil India IPO this week.
Coming up, our segment on mutual funds with Rajiv, Lulla and Aarti Krishnan. Stay tuned.